Well, what the heck is escrow? Well, escrow account is the same as an impound account. And of course, in California, escrow account can be confusing for us because here, unlike most other parts of the country, we have independent escrow companies that handle real estate purchase transactions. Back east, they don't have escrow companies. They use title companies and title attorneys. So that's the one thing to know from a verbiage standpoint. Impound account, escrow account, it's the same thing. The basic idea is what you're going to do if you set up an impound account. It is going to increase the cash you need at closing. And it also is going to mean that the payment that you're going to make to the lender every month is going to be higher with an impound account than without an impound account. Well, why is that? Well, the reason an impound account is set up is so that when you're making your monthly payment, it will include 1/12 of your property taxes, 1/12 of your homeowner's insurance. And then when the lender receives your payment, they're going to pull out of that payment that 1/12 of taxes, 1/12 of insurance, and they're going to put it in the impound account for each type of expense. They often call it a bucket, the property tax bucket and the hazard insurance bucket. So that gets pulled out of your payment every month. 1/12 of your annual taxes, 1/12 of your annual insurance premium goes into the impound account buckets for each. And then as that money accumulates every month when you make your payment, when the next installment is due for either taxes or your insurance, the lender disperses the payment for you so you don't have to yourself. And again, that's why I say the monthly payment's going to be higher if you do an impound account. But again, the offsetting benefit is when those taxes come due, which in California is twice a year, it's 6 months at a time, a big number. You don't have to deal with that. It's already covered in your monthly payment. So you're paying a little bit more per month, but then you avoid that big 6-month installment, which comes at bad times of the year, like right before Christmas on December 10 and right before tax time in the spring on April 10. So that's the benefit of an impound account. Now, if you don't have an impound account, the benefit is your payment to the lender is lower. It's only principal and interest. You don't have to include 1/12 taxes, 1/12 insurance. But then you have to have the ability to pay those tax and insurance installments when they come due. You have to have the ability to do that. Not all homeowners are comfortable with that, particularly on the property tax part, where you've got to come up with 6 months at a time if you don't have an impound account. So that's something important to understand. So which is better? It's personal preference. It's a matter of convenience. Some folks like an impound account. They think it's more convenient. They just want to make one payment, not have to worry about those tax bills and that insurance renewal when they come due. They figure it's already covered in their monthly payment. The lender will handle those disbursements when they happen.